Hey everybody, this is Christopher Smith. This video should last about 15 minutes, and we'll give an introduction to the range bands indicator for TradeStation. So if you need to reach me, you can email me at support@fibtools.com or visit my website at www.fibtools.com. So this is the standard disclaimer for trading products. Trading is risky. Do not trade with money you cannot afford to lose. This is not trading recommendations, and past performance is no guarantee of future results. Proceed with caution. Okay, the goals of the presentation are to introduce you to the range bands indicator, show you how the bands are calculated, how they help you make trading decisions, and how to get the range bands indicator for TradeStation. So range bands are a universal trend following indicator. It can be applied to any stock, commodity, index, or ETF at any time frame greater than 60 minutes. So if that sounds powerful, it is, and they also give you basic direction for the market, blue being up, green being neutral, and red being down. So let's see what the indicator looks like. Here's a standard chart of the QQQ, the NASDAQ 100 ETF, without the indicator applied. We're going to go to Insert, Indicator, and go to Paint Bar and choose Range Bands, Upper and Lower Paint Bar. You can see now that the paint bar, the prices are now painted in one of three colors, blue for an uptrend, green for neutral, or red for a downtrend. So zooming in on some recent price action here, let's go to our zoom tool and take a look at this. Okay, we can see here back in early 2016, we had a gap down pretty much on the first day of the year, and prices were red according to the range bands. Stayed red pretty much the entire time, went green here briefly in early February, went red again, and finally went blue here in about the 22nd of February 2016. The prices have pretty much been up since then. So you see the range bands do a very good job of basically following trend, and in the very recent past they've done a good job of keeping you on the right side of the market. They don't always work that well. Back here in later 2015, you could see that prices were blue, indicating an uptrend. They went red, they went blue again, they went red again. So they're not always this spot on in terms of market direction. But recently they've done fairly well. Okay, so how are the bands calculated? First, we find the midpoint of the prior 14 bars, and to do that, we first find the range, which is the highest high minus the lowest low. Divide that by 2 and add that to the lowest low, and that gives us basically a midpoint between the highest high and the lowest low over the past 14 bars. Okay, next we find the 14-bar average true range, and we calculate the upper line being the midpoint plus 1.05 times the ATR, and the lower line being the midpoint minus 1.05 times the ATR. So we go back to the chart and we insert indicator. This time we're going to do lines, and we'll see that the range bands are really just lines that are above. Well, we have to format these with price. Let me do that. Format, analysis technique, scale with price. This is the upper line. Let's just close out of this. Format indicator, scale, same as underlying data. Okay, so you'll see that once you do that, that range bands are really just price levels around the market. There is an upper line that I plot here in blue, and a lower line that I plot in red. The prices are above the upper line, the bars are painted blue. Below the lower line, the bars are painted red. So the other thing you'll notice about the lines is that they're sensitive to the range. So back here, prices had a fairly large range, and the lines were far apart. As prices moved up, the range contracted, and the lines were very close together. So the indicator is sensitive to the range of the tradable, and that makes them very flexible for detecting, signaling price moves in one direction or the other. So we look at some charts, and let's take a look at a couple other ones. So here's the QQQ. Let's take a look at, say, Facebook, for example, one of my favorites. We can see that Facebook was fairly choppy. Prices were red, they went blue, back to red. But when some big moves came along, such as this one right here, the indicator went positive and stayed with Facebook through most of the move. You'll also notice that after this recent gap in earnings we had here, Prices shot up to an all-time high in the 115 area. Prices pulled back, had a pretty substantial pullback actually, but the range bands indicator has been positive the entire time. Prices never actually went negative after this move. So we have earnings coming up in a few weeks on Facebook, so keep an eye on that for some further potential upside action. Another interesting one to look at is Twitter. Twitter's pretty much been in a downtrend, I think it's safe to say, and you'll notice that prices went negative back here in, I believe it was, I guess, April of 2015, and prices have been pretty much down ever since. Quick blip above the line here. Went positive in early October, just turn around and go negative again. So Twitter has been in a downtrend, and the range bands have done a pretty good job of identifying that. One more we're going to look at is, let's look at oil. Let's look at XLE. Okay, you see prices have been in a pretty persistent downtrend most of 2015. Briefly went positive here, went negative again, and went positive here in early February. And again, it's been positive ever since. So again, the range bands do a pretty good job of indicating overall price direction. Okay, so advantage of using range bands. Range bands you'll always be in the right side of a big move if you follow the range bands. You might get whipsawed, but you'll never miss a big move, essentially. They give you clear, unambiguous long and short signals, and they do work in any time frame greater than 60 minutes. The disadvantage of range bands, you know there had to be one, right? The distance between the upper and the lower lines are over 2 times the average true range, so the price can move quite a bit before it changes direction. So what that means is in sideways or trendless markets, the indicator, you can get chopped around and produce multiple changes in direction, leading to losses. Okay, so I also provide the range bands as a trading system. So to do that, to check that out, we go to Insert Strategy, and we're going to add range bands, long entry, long exit, short entry, and short exit. Click OK. And now the range bands can easily be turned into a trading system. To see how they did, you can go to View Strategy Performance Report and see exactly how the system performed. So I applied this to a few different tradables, and I looked at the overall performance, the long-only performance, the short-only performance, and versus buy and hold. What I found was the summary is as follows. For SBY, over the past 10 years, the system lost money when applied both long and short. When applied long only, it made money. So it made money on the long trades, lost money in the short trades, and neither of them did as well as buy and hold. For Facebook, the long short, again, lost money. The long only made money. The short trades lost money, and neither of them did as well as, again, as buy and hold. For Amazon, long and short system did very well, but not as good as the long only trades, which made $40,000 on 100 shares, not bad, but not as good as buy and hold, which is $54,000. But you notice that the long only did capture a good part of the buy and hold profit in this case. In the case of Twitter, the long and short lost money, long only lost money, but the short trades made money, and buy and hold, of course, has been pretty miserable for Twitter. So what's really the conclusion here? The conclusion I find is that the range bands are a good general purpose trend following indicator, but they're not a universal trading strategy that can be applied. You can't apply it, just throw it on a chart and expect to make money. Performance of the system really is based on the performance of the underlying itself. So if the underlying had a positive performance, you're generally going to make money following range bands. If it had a negative performance on the long side, if the stock had a negative performance, you're going to make money following range bands on the short side. So how does that help you? Well, what I find is the positive return is more based on the behavior of the underlying. So it helps to have a bias. Look at the chart, look at the market, based on the fundamentals and technicals, decide whether it's a long or a short, whether it's a positive or a negative situation, and then you can use the range band to signal entries in the direction according to your underlying bias on the tradable. How do you get the range bands? You can download them from the Fib Tools Sell Store. And you can see those. You can get to that from the website, my website, at fibtools.blogspot.com, or www.fibtools.com also works. From there, you can click on the store link over on the right side. And the first item up there is the range band's free indicator for TradeStation. So why am I giving this away for free? Well, basically, it's a static calculation. It never changes, and I don't think it's fair to charge for something that's just a static calculation. The distinction there is the fib lines indicator is something I sell also up there. And the fib lines is different from range bands in that it helps to identify hidden areas of support and resistance. So unlike the range bands, fib lines cannot be applied to any symbol. They have to be calculated by hand somewhat for each symbol. So they only support a limited number of symbols. And I give away a free version of fib lines for both Thinkorswim and TradeStation. The free version supports your major ETFs, QQQ, DIA, SPY, and IWM, and their continuous contract futures equivalents. And I also sell a paid version of fib lines, and that has support for the same symbols as the free version, plus the Dow 30, NASDAQ 100, select sector spiders, and some other major symbols, your gold GLD, your select sector spiders, the dollar index, and some other commodities. And that costs $99 for 1 year of maintenance. And as you'll find out, there's a work involved in fib lines indicator. It has to be recalculated as prices change. Again, the paid version supports over 220 symbols, your Dow 30, your NASDAQ 100, and many other major markets. So you can get that also on the fib lines sells store. So follow my blog, fibtools.blogspot.com, and there you'll see my ongoing interpretations of the indicator. In this case, we have both the range bands and the fib lines applied together along with the awesome oscillator. So follow along on the website to see how both those indicators work in combination. And also expect the range bands and the fib lines to be available on the TradeStation App Store at tradestation.tradingappstore.com. So that's it. If you have any questions or comments, again, you can email me at support@fibtools.com. And thanks very much for watching, and have a great day.